Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka, and it looks like we are bracing for another down day for the market, given the fact that the rupee has just opened up and we are staring at fresh record lows on the currency, 90.41. That's the record low that the rupee has made at the open. Of course, the currency has been a cause of worry for the market at least. We've been reacting to the currency moves. In fact, ever since we hit a fresh record high, the trend has kind of been on the downside because of the sharp slide that we have seen in the value of rupee. But the government, isn't really losing sleep over it. Chief Economic Advisor, Anant Nageshwaran has said that, 2026 will be a far better year for rupee, and perhaps it's the right time for the rupee to depreciate, and it's also not hurting exporters as well as inflation. So the government is not really too worried about it. And in terms of RBI, they've already said that they won't be really defending any level for the rupee and will let the rupee find its own level. But we have the crucial RBI policy decision tomorrow. We'll have to see whether or not the rupee will be a factor while the RBI or the MPC decides on its rate decision. The street is divided, whether there will be a rate cut or not, given the fact that GDP data was also pretty strong and inflation is at record low. Some experts believe there is no real need for a rate cut, while there's another section that believes that, if you want to really revive animal spirits, perhaps a rate cut would be good, despite the kind of macro cues that we have. But yes, lots to watch out for today. In the pre-open, we are seeing a down tick on the Nifty. Earlier it was down 100 points, but right now in the pre-open it's showing a 34-point down tick on the Nifty. It's also the Sensex expiry, so that volatility factor will be there, at least in the last hour of trade or so. So, perhaps there would be some bit of caution in trade today as well. But in terms of global markets, fairly mixed. GIFT Nifty in the negative. Wall Street had a good session. Asia is mixed. And of course, that's the global picture for you. But, in terms of stocks as well, quite a few of them to watch out for. Your stock related queries will be in focus. Keep them coming in. We'll try and get them addressed as well. But before we do all that, quickly take a look at the top stories at this hour. Wall Street gains as a surprise drop in private sector jobs strengthens Fed rate cut hopes. Dow gains over 400 points. Meanwhile, Asian markets are mixed, while the GIFT Nifty is indicating a lower start for the Indian market. Crude prices rise as attacks on Russian energy assets weighed against the lingering view of oversupplied market. Gold prices, meanwhile, hold steady. Just months after getting relief from the Supreme Court, JSW Steel sells 50% stake in Bhushan Power to Japanese conglomerate JFE for over 15,700 crore rupees. Management tells CNBC TV 18 that the balance sheet will get deleveraged by 37,000 crore rupees post the deal. Chaos at major airports across India as over 150 Indigo flights get cancelled, leaving thousands stranded. Airline cites operational glitches and crew rostering issues, while pilot body alleges pressure tactics over new FDTL norms. India and Russia all set to bolster economic ties as President Putin arrives in New Delhi on a state visit this evening. India to push for increasing pharma, agri and textile exports. Prime Minister Modi and President Putin will also discuss a free trade agreement, which of course could be signed in the future. All right, we did close in the red yesterday, but the good part was that we managed to defend that 20 DMA level of 25,920 or thereabouts. We did recover sharply from the day's low. In fact, the Nifty Bank Index managed to end the day in the green. Private banking names like HDFC Bank, ICICI Bank, Axis Bank, these were some of the contributors to the Nifty Bank's reversal. It was a good thing to see, but let's see whether or not that late rebound extends into today's session or not. At least going by the the pre-open, things are looking a little skittish. Let's see how things really pan out once we start out at 9:15. It was a broad-based fall. Otherwise, PSU banks were the biggest laggards. Government has denied, any plans to hike FDI limits or FI limits, so to say, and that really, took a toll on PSU banking names. In fact, the index per se, the PSU bank index, was down in excess of 3%. Rupee, of course, has been a talking point. Yesterday, it had a record low close of 90.19 or so, but this morning it has hit another fresh record low of 90.41. So currency in free fall. In terms of stock movement, JSW Steel was in focus after that JV announcement with JFE. I think the street was slightly disappointed with the price, but post market management did make some comments. Perhaps that would come as some bit of a reprieve for the stock, although the stock did come off its lows as well. Indigo will be in focus with all the mayhem happening around cancelled flights. Of course, you also have BSC that was in focus yesterday, ended 3% lower as sources suggest that SEBI is mulling suitability criteria for F&O trades. So that would tighten F&O norms. So that's something that weighed in on a stock of BSC. In terms of fund flows, foreign investors remain net sellers. 3,200 crore rupees worth of stocks sold in the cash market. DI buying support continues. 4,700 crore worth of stocks bought in the cash market. Put call ratio declined to 0.85 vis-a-vis 0.94 in the previous session, and Sammaan Capital remains in the F&O band today as well. To understand the texture going forward for today's session, let's bring on board Chandan Taparia, Senior Vice President and Head Derivatives and Technical Research at Motilal Oswal. Chandan, lovely chatting with you. We've seen a good recovery from lows. Yesterday, we did manage to defend that 20-day moving average mark. But given the way the currency is falling, would you expect the pressure to resume and today's Sensex expiry? How much lower are you expecting the Nifty to go?
Yeah, good morning, Nandita. Thanks for having me. So Nifty has seen a corrective move from higher levels in last 3 days. After hitting an all-time high at 26,325 on 1st of December, it corrected towards 25,891. The good part is that major trend of the market is positive, and we made a new record lifetime high. But concern is that Nifty made the high, but many sector or mid-cap, small-cap are still 10, 15, 20% down from their high level. Market wanted to cheer the party as it hit the new lifetime high, but somehow Rupee changed the sentiment as it is hitting to 90.1 and beyond that. And because of that, upside seems to be kept. However, we need to keep in mind that major trend of the market is positive, and because of that, any meaningful decline could be bought. But for short-term point of view, slight sentiment may change. So because of that, we are looking for some decline, which can take it towards 25,850 to 25,750. And one need to keep in mind that in this scenario, when data setup are positive, like GDP data is at 6-quarter highest at 8.2, inflation is at 20 years low of 0.25. We have upcoming RBI policy. So because of that, undertone could remain bullish. So continue to be with buy on decline instance, and be with the selective sector like auto ancillaries, IT, capital goods, and selective consumption theme in this market scenario.
Okay, be with all those sectors that Chandan just mentioned. But Chandan, what about banks? Banks staged a good recovery to end the day in a positive zone. Likes of HDFC, ICICI, and Axis Bank, these were the top contributors. What would you do with them after yesterday's recovery?
So Bank Nifty has been outperforming the broader market. 3 days back, it made an all-time high beyond 60,000. But yesterday, it took some pressure and made the bottom near 58,925. The interesting part is the last hour of the trading recovery was quite remarkable, which formed a bullish hammer kind of candle on the daily chart with exact support near its 20-day exponential moving average, but follow-up is required. But somehow I believe that 58,500 could act as a positional support for Bank Nifty to again witness a recovery towards 59,750 to 60,000. So comparatively looking lesser decline in the Bank Nifty index, while PSU might see some range-bound bias with some decline, but private banks could do well. So talking about Axis Bank, recently it retested the key support zone. Exactly, it retested the key level of 1250, 1255. So that can act as a support for a recovery towards 1305. ICICI Bank could be on radar. It is support near 1360. With that support, it can head towards 1420 kind of level. RBL Bank, we are also keeping on radar, which can negate the lower top, lower bottom. AU Bank has been holding, so with support of 930, it can swing towards 980 kind of level. So I think these are the selective name in the banking we need to focus with some outperformance in the Bank Nifty compared to Nifty index.
Okay, that's the view. Of course, the setup for Nifty Bank Index looking much better than the setup on the index per se. What about IT? Of course, the Rupee tailwind working well for IT. That was the top sectoral gainer yesterday. Good time to look at some of these names like TCS, Infosys, even the likes of Coforge, Persistent. For for a trading play, would you prefer mid caps?
Yeah, so like Nifty IT is getting some sentiment benefits and in fact it started to form higher top side bottom from last 4 weeks. If you want me to add one name, I'll focus on the Wipro, which has given a consolidation breakout on the daily and the weekly chart. With support of 251, it can head towards 265. And if you talk about the other name, Persistence already seen the decent recovery and the run up in last month. Now has been consolidating, but I believe with support of 6250, it can head towards 6600 kind of level. TCS has been shifting slightly higher, given a consolidation breakout with positive price pattern. So with support of 3130, it can head towards 3300 kind of levels. Looking at Coforge, yeah, mixed set of cues, but consolidation breakout could be seen with support of 1890. It can head towards 1980. So I believe because of the weakening rupee, selective IT counter could be in focus, and I think one need to focus on these names for short-term trading point of view.
All right, for short-term trading point of view, Wipro, TCS, Coforge, these are some of the names to watch out for. But just about 3 minutes to go for the markets to open. Chandan, let's get in your recommendations for our viewers first before we come to other stock-related news and queries as well.
Yeah, so first it will be buy on Asian Paint. The major trend of the counter is positive, and in fact, recently it gave a pole and flag breakout on the daily and the weekly chart. However, on the last trading session, it remained consolidative, but major trend is positive. So with support at 2880, looking for an upside target was 3040 kind of level in Asian Paint. Apart from that, I believe selective metal counter can do well. So Hindalco will be the preferred pick, which is all set to give a consolidation breakout of last 20 days. So with support of 808, it can head towards 840 kind of levels.
Hindalco, Asian Paints, those two recommendations coming in from Chandan. But Chandan, let's talk about some specific stocks then. IEX, this stock will be in focus. It has come out with its November update. The electricity traded volume is up in excess of 17% on a year-on-year basis. The day-ahead market volume is up somewhere on 0.3%. Real-time electricity market volume is up over 40%. I think there was, certain news flow regarding IEX recently. So I think the stock did react to that negatively. And this morning, of course, the stock will be in focus once again. In the pre-open, I can see a good traction. In the last 5 sessions, it has seen a good 7% kind of gains. Would you be looking at this stock at this juncture? It's at 151. Still some time away from that 215 level or 52-week high level of 215. Is it a good time to look at the stock?
So if I look at the past data setup of this counter, it had witnessed a corrective move from 205 to all the way till 130. And we are now near to that panic area. So if recovery happens, that will remain fast because the same kind of price behavior could work here. So I believe with support of 147, it can bounce towards 160 kind of level.
Okay, it can bounce towards 160 kind of levels. There is a query on it from Naveen. Hope that answers your query. But let's shift focus to the market. We are getting in the first ticks, and as was being expected, it's a negative start. But no big cuts really. The mid-cap index, in fact, is trading in the green as we speak. First let's take stock of what the benchmarks are doing. The Nifty is around that 25,950 mark, 37 points down. Sensex down 140. Mid-cap holding out in the green, as I mentioned, started the day on a positive note. Let's see whether this positive traction continues or not. Bank Nifty, I could see some green ticks at open, but it's now flattish with a negative bias. So no big moves in the market, although the rupee has made a fresh record low this morning. Breadth, skewed in favor of declines once again right at the start. We'll wait for it to settle, but not looking all that great. Market breadth has been a cause of concern. It's consistently been weak. So today seems to be no exception. But let's take stock of some of the other sectors then, which are the sectors that are taking the lead at the current juncture. Metal index is up in excess of 0.5%, and there's a reason behind it because the dollar index saw a drop of almost 0.5% last night. So that's sub 99 levels, and it's seen its worst drop, I think, in 3 months. So yes, that is something that's supporting metals. which is why the metal pack is the top sectoral gainer. IT, rupee tailwind, so another 0.5% gain for the IT index. PSU Bank index is managing to limp back after a 3% cut yesterday. It's trading with gains of somewhere around 0.2%. FMCG, that's the big laggard. No big moves, but still it's the top sectoral loser at the juncture. Autos, real estate, pharma, and Nifty Bank as well, as I mentioned, it's a little on the subdued side. So mixed picture, but metals and IT clearly taking the lead today. In terms of the top movers, let's take a look at which are the top gainers. Wipro was one of Chandan's top picks, and that's the top gainer on the Nifty. Hindalco, that's the next one that's doing well. JSW Steel, after the management commentary, the stock of course did take a sharp knock of 3%, managed to recover from day's low. Today it is in the green territory. The management did say that the deal with JFE will lead to debt reduction of I think around over 37,000 crore rupees or thereabouts. So I think the street is warming up to it, and there are some brokerage notes as well on JSW Steel. So that stock is up 0.5%. Tata Consumer from the FMCG pack is among the gainers. Yesterday it was out of favor. In fact, FMCG stocks have been out of favor recently. Asian Paints, another pick from Chandan, that's again extending its gains. 0.3% kind of gain there. Two-wheeler names like Bajaj Auto, Eicher Motors gaining, and Axis Bank extending its gains from the private banking names. Bharti Airtel also among gainers. What's not doing well? Indigo. I mean, there's been massive mayhem across airports across India. So many flight cancellations, in excess of 150 flights cancelled. So there's complete mayhem, and the stock clearly has been on a downward trajectory. And today, top laggard on the Nifty as well. HDFC Life, that's a close second. Titan also out of favor, along with Eternal, HUL. So all these consumption names have been under pressure of late, and today is no different. Aside of Tata Consumer, I can see most of them are trading in the red, and so has ICICI Bank slipped into the red, 0.5% down. Kotak Bank also in the red. So net subdued start, but the mid cap index is clutching on to the positive zone by the skin of its teeth. Let's see whether it can manage to sustain that or not, but the breadth not looking all that great. But let's talk about Indigo. I think ever since it's been included in the Nifty, the stock has been on a downward trajectory, and now with the entire flight cancellation issue playing out, things aren't looking all that great. There was an ETF price hike as well recently. Then there's been some GST penalty that has come in on the company as well, and now this whole mayhem with respect to flight cancellations. What's your take on the stock? How is it poised on the charts, and expected to continue its weakening streak?
Yeah, so when you talk about the Indigo, I believe selective counter has been witnessing selling pressure. In fact, Indigo failed to surpass 59.60 kind of level and has been making lower top, lower bottom. Today, it has given a breakdown of last almost 112 days. So structure is turning weak, and in fact, the negative news flow is also somehow changing the sentiment. However, long-term story remains intact, but short-term point of view, as the broader market is witnessing decline, this counter can drip down. So I believe as of now, till it remains below 5600 zone, it can go down to retest the key support at 5300 to 5250 kind of level.
Okay, setup is looking weak for an Interglobe Aviation. The stock is the top Nifty gainer. I beg your pardon, Nifty loser. But let's talk about Oil India as well. That stock is in focus. No big moves on the stock. The arm Numaligarh refinery gets Navratna status by the Ministry of Finance, but that's really failed to lift the spirits of an Oil India. The stock is trading flat with a negative bias. But if you look at the charts, the time frames, different time frames, you'll see it has given negative returns. Would you say that the setup will remain weak, or would you say that perhaps it could look for, finding a floor around these 400 levels?
I think trade setup is slightly negative. It has been making lower top, lower bottom on the weekly chart, corrected from 450 to 410. So already correction has seen in the counter, but yes, major supports are visible near 395, 400. But counter can drip down towards those levels. And the concern is selective other same kind of companies, including ONGC, has been making lower top, lower bottom. So I believe some more profit booking could be there.
Okay, more profit booking could be there in the names like Oil India, ONGC, etc. But what do you make of the move on a Petronet LNG? It has entered into a 15-year ethane unloading, storage, and handling services pact with ONGC. The stock has perked up, but even this stock has been weak if you look at various time frames. Today's move, would it signal any kind of a reversal, or is it just a one-off?
So this is a very specific counter which moves on some day and then get stuck in a range. In fact, from last 18 weeks, the counter got stuck in a range between 266 to 286 to 87 kind of level. So we have to play the range. Those who are looking for buying, keep the support at 270, but at the same time not expecting it to go beyond 280 to 283 as well.
That's about Petronet LNG. But one stock that's perking up and how in trade is Nectar Life Sciences. Board has approved a share buyback of 81 crore rupees and of course the record date for that is 24th of December. The stock has shot up in the last 1 month or so. We've seen a 42% move on the stock, but it's still half of where it was, half of its level, 52-week high level. How would you trade into this counter? Is it worth looking at given its recent up move?
So I don't think so. In fact, in last 2 years, counter has seen a corrective from corrected from 56 to almost 20 levels. Multiple years low is near 7. From last 3-4 years, the multiple lows are visible near 13-14. So however, on the weekly chart, it has bottomed out. But again, the concern is how much follow-up buying could be there. So those who are looking for swing play, they can look. Otherwise, I'm not looking or expecting major swing in the counter. As of now, 17.5 is support for one's recovery towards 22-23 levels.
Okay, that's about Nectar Life. But let's talk about Hindustan Zinc as well. The stock, of course, is in focus as silver continues to hit record highs. Good time to look at Hindustan Zinc on this silver rally.
Yeah, so we are positive on Hindustan Zinc. In fact, positive on the silver as well. And I believe Hindustan Zinc is the proxy of looking at silver in the equity market. However, it has not performed like how silver has rallied well in last couple of months. But yes, major trend could remain positive and slow and steady. This counter will move on higher side. So as of now, with support of 495, we are looking for an upside target towards 525 to 530 levels.
Okay. 525 to 530 levels cannot be ruled out on Hindustan Zinc. Of course, a play on silver, that's Hindustan Zinc for you. But let's shift focus to our viewer queries then. Getting one addressed on CDSL. I think this one's coming from Amit Kumar Srivastav. Wants to know if it's the right time to enter into the stock of CDSL. The stock has been pretty sideways in the last 1 month, but if you look at the 6-month chart, it has seen quite a bit of a dip. Would you recommend a buy here, or would you say look at some other counter?
So I think it's a good name, but again, range bound bias is clearly visible. If someone is looking for slightly bigger time frame, I think one should add in the portfolio. But if someone is looking for immediate point of view, then some sideways consolidation could be there in the counter. Those who are looking for some bargain buying, they can wait for a key level near 1500. So near to those zone, one can start accumulating for an upside target to 1650 and 1800 on positional point of view.
Okay, that's the view on CDSL. Hope that helps you with your query. But there's a query on BEL from Kaliki. I beg your pardon. So I mean, defense stocks will be in focus today. Of course, we have the Russian President coming to India. Of course, so there will be bilateral talks and trade, defense, etc. will be in focus. How would you play defense stocks ahead of that?
So short-term momentum is missing in most of the defense name, but long-term story remains intact ahead of the upcoming union budget in the Feb. I think that will be the key trigger. But as of now, I think some sort of more consolidation could be there in the counter. 390, 392 could be a key level to accumulate this stock. 420 is immediate hurdle. Above that, only the first leg of rally could be there. So I think range bound bias could be there. One can go with buy on decline stance in this name.
Buy on declines on defense stocks, that's the call. Let's move on to the next query then. Now take up this query from Amardeep Shah. He has a query on Apollo Tyres. Tyre stocks saw a good perk up, in the last 5 sessions. I think JK Tyre, Apollo Tyres, even MRF for that matter. They did see, some bit of an uptick over the last 5 sessions. Particularly for Apollo Tyres, what are the next levels to watch? What are the support levels to keep? It's not very far from its 52-week high as well.
So the major trend of the counter is positive, and but momentum is missing because of underperformance of the mid cap and small cap basket or index. The good part is that the counter has been holding well above its rising trend line and holding well above its 50-day exponential moving average from last 40 days. I think a small follow-up is required to get a consolidation breakout of last 14-15 days. So good part is supports are intact. Immediate support is at 520. Till it holds 520, one can continue to be with buy on decline stance. But if it moves above 540, then only the real strength and the momentum could be seen towards 555, 570 kind of levels.
Okay, momentum is missing until that picks up. That's the call on the stock. Let's move on to another query then. I think this one's coming in from Pooja. She has a query on Trans Rail. She's holding the stock at 680. Is it a good time to average or exit? She's making a loss here. The stock is quoting at 623. Would you advise in averaging out, or would you say switch?
So I don't suggest to advise, but yes, one can hold and look for some sort of stability in the counter. As of now, the structure is weak. Broader market is also underperforming, so that is the reason. So better to wait and watch. That is going to be the best stance as of now.
Okay, that's the view. Wait and watch. There's a query on Geo Financial that's coming in from Solomon. Wants to know, he's holding Geo Financial and he's making a good profit out of it as well. But he wants to know whether he should continue holding it or look at booking partial profits. What should he do?
So I think he can also book some percentage, because it has been consolidating in a broader range from almost 4 months. Multiple supports are near 292. Multiple hurdles near 315, 316. So a decisive range breakout is required. Then only the next leg of rally could be seen. So he can do one thing, he can exit some position and buy only if it holds about 312, 315. Then he'll get the immediate swing, or in fact, at that time he can hit double quantity as well. So this is how he needs to plan in such counter.
Okay, that's the view. I hope that answers your query. Last couple of queries to go. We are kind of running out of time. But we spoke about banks and you mentioned a few of them. But Bank of Maharashtra, there's a query from Aisha on this particular stock. How is that looking on the charts? Would you look at a Bank of Maharashtra at all, or would you look at some of the other names like Federal, Canara? She's pointedly asked a query on Bank of Maharashtra.
So let me first reply on the Maharashtra Bank or Bank of Maharashtra. Major trend of the counter is positive, but it has been consolidating in a range down by around 3.5% in this week. But multiple supports are visible near 54, 53.5. So 53.5 could be a major support. With that support, one can accumulate for 61 kind of level. And if I look at the other name, I think Federal Bank is comparatively doing well. Has been making high top, high bottom on the weekly and the monthly chart, has been consolidating. But till it holds about 252, it can head towards 370 kind of level. IDFC First could be other name where we are witnessing positive price action. Till it holds about 77, it can head towards 85. But yes, overall selective, certain banks could do well in this market scenario.
Okay, that's the view then. I hope that answers your query. There's a query from Shweta on PFC. She has a buy price of 427. She wants to know whether she should average or exit. Some of these power financiers have been stuck in a downtrend, and PFC, it's shed 11% in the last month or so. It has been under pressure really on a YTD basis as well, down over 20%. How would you look at some of them now?
So the structure of the counter is weak, and the stock is now almost quoting near its 22 months lowest level. It has given a breakdown with a decisive hold below 360. So it is very important to surpass 360. Otherwise, there is a further pressure of the breakdown in the counter. 363 could be the hurdle, downside 340, 335 could be the next level to retest.
Okay, that's the view. Chart structure not looking all that great. But, let me get in last two queries then. One on BKG. I think I'm not getting the person's name. Leo, that's what it says. He bought it at an average price of 535. Wants to know whether he should hold or sell. Still making a profit really. 700 rupees, it's where it's quoting at. What should he do with this holding?
Yeah, so major trend of the counter is positive, but from last 4 months it got stuck in a range, corrected from 800 to 700. I think he has bought at right price, so he can wait also. I believe this time it can head to a 720 or above 720. Momentum can catch it to a 770 to 800 kind of level.
Okay, that's the view. Hold on to it. That's the call. Last query then, Gitu Sandesh, view on Ashok Leyland. Is it time to book profit or accumulate now? Saw good numbers when it comes to the sales figures for November. The stock has also done fairly well. Is it a good time to accumulate, or how should one approach? It's in fact very, very close to 52-week highs.
Thank you, Gituji. And I think in this show, we keep on getting the regular message from Gituji, and that appreciate a lot for that same. So Ashok Leyland is a good name. In fact, I have quite bullish on the same. It has rallied well by more than 45-47% on YTD basis. In fact, auto theme will do well in the Indian market. Ashok Leyland is one of the strongest name. So till it holds above 150, you can continue to keep the positive stance in the counter. Overall, I'm looking for an upside move towards 170, 175. In fact, for intraday point of view, 157 is the support for 166, 170 kind of levels.
Okay, that's the view, bullish view coming in on an Ashok Leyland. Well, that wraps up our query segment for today. Chandan, would like to thank you for taking out time and joining in and helping our viewers navigate their stock-related queries as well. Always a pleasure. And look forward to our next interaction as well. Have a fabulous rest of the day.
Thank you so much. Have a great time.
Thanks a lot. Well, before we move on to our next guest, just take a quick look at the market. We have edged back into the green. Off the day's lows, in fact, when off opening lows, it's not even been a day yet. 25,990, that's where we are at. Just about 6 points higher on the Nifty, but still we've managed to recover those early losses. Sensex up 25 points, mid-cap index gaining some traction, up 0.2%. The breadth of the market has also reversed. It's in favor of gainers now, marginally so, but nevertheless 1307 advances to 1203 declines on the NSE. So good to see some green on the screen, but remember it's the Sensex expiry as well, so be prepared for some bit of volatility to kick in the last hour of trade. Rupee 90.37, that's where it's at. Of course, made a new record low today, 90.41. Remains around that above that 90 level, decisively so. So yes, that is another thing that of course we'll be keeping an eye out on. Bank Nifty, although is in the red, but marginally so. So let's see if that can also reverse or not here on. So yes, I mean it's not looking all that bad. Let's hope that we can only pick up pace from here. But on that note, let me bring on board our next guest for today. Joining me is Amit Kumar Gupta, founder and CIO at Fintrekk Capital. Amit, lovely chatting with you. Been a very, very long time since I spoke to you last. Just want to get in your sense on what are you making of the reversal that we've seen from record highs, especially in the wake of rupee weakness, and also the fact that broader markets haven't really participated, and there seems to be a miss in terms of conviction at highs. So what's your sense? What did you make of the recent leg of rally, and what did you make of the reversal thereafter in the wake of all the other factors that are at play?
Yeah, good morning, Nandita. Nice to be back. So I believe, given how things are panning out on the tariff front, we haven't, heard about any sort of a deal coming up. Market has just developed a little bit of, worries about that front. Obviously, there is a big RBI meeting also tomorrow. And then you had this rupee weakness over the last couple of weeks, where we have effectively moved from 87 to about 90 plus now. Even though I believe that, a weaker exchange rate is actually the best antidote to the tariff war. But we'll see how it goes. There was a little bit of profit taking. Nifty hit a new all-time high. Nifty mid caps also hit a new all-time high. There has been a little bit of profit taking given those levels. Yes, the broader markets are lagging, and I believe the earnings growth is sometime away, probably in the next fiscal year starting only. We'll also see some more rate cuts, hopefully from the RBI, more liquidity injection to go with it. That would help in lowering the borrowing cost. And then we can have a look at broader markets participating more in the medium term. But I think in the near term there are a couple of issues which are pegging the market. Until those are out of the way, I think we can just have a sideways kind of a movement.
Okay, that's the view. But in terms of rate action, what do you think the RBI will do? Will they take the rupee weakness factor into account? And also the fact that GDP data was pretty strong and inflation also, is at record lows. Within all these, moving parts and all these data, do you think there is a fair bit of need to cut rates now, or perhaps, later, at a later point in time? Because the RBI governor did mention that there is scope for more easing. So should they do it, this policy itself, or should they wait it out?
No, I believe they should move in this policy itself. The inflation backdrop provides the MPC with ample policy space. The headline inflation is actually eased to historical low of 0.25% year on year in October itself. November data will also come out, but I don't see a major spike in the inflation even in November. Even the core inflation has stayed within the comfort zone for a while now. Crude prices has been stable. So this is actually keeping the real rates elevated, particularly because the transmission into the bond yields has been slow. And even though, RBI has cut by 100 basis points, the 10-year is actually reverting to those earlier levels, 6.3, 6.4 itself. So there was a decline, but, it has reverted back. And lending rates have moved lower, but still the high LDR is actually inhibiting in further transmissions. We also need a little bit more liquidity injections in achieving easier monetary conditions in the economy. So I would say that RBI would cut rates, but it will be a cautious rate cut. As far as the weakness in the rupee is concerned, I think that's done now. Usually we move 3 to 4% depreciation on a per annum basis. We are already at almost 4.5% for this year. So I think that is probably out of the way with this depreciation which has happened. So RBI should move towards the rate cut, but whether they'll go with 25 basis points or 50 basis points, that needs to be seen.
Okay, so you're in the camp that is expecting a rate cut, and in fact you are going to the extent of saying whether it will be at 25 or 50. We need to watch out for that. Since we are talking about the rupee weakness, is it time to focus in on some of these export-oriented sectors, the likes of IT, perhaps textiles as well? I mean, would you be, in the camp that says that perhaps take positions in these sectors before any kind of announcement on trade deal comes by?
See, I think one cannot take a broader approach on this. It has to be much more stock specific. As far as the sectors is concerned, the broader rule is that the rupee is depreciating, so exporters like IT, pharma, and textiles would benefit. But we have seen, in textile, there has been a lot of issues with respect to the tariffs. So we haven't heard on that. So that's a big risk going into that. Similarly, IT, the business, the new business which has to come because of AI, that has been a little bit on the slower side. Again, the demand is on the slower side. But the opportunities is probably on the mid cap and the small cap IT space, which does not have too much exposure on the US side. Or similarly, the exporters, which are not so much prevalent in the US, which are more towards oriented more towards the other geographies like the European Union, etc. That is, I think, much good looking. So we cannot have a flat kind of analysis that the rupee is depreciating, so everyone will benefit. My sense is it's very stock specific and sector specific.
Okay, be stock specific when it comes to the export related plays. But what about defense? We have the Russian president coming to India this evening. Defense, trade ties, etc. All this will feature on the agenda in the talks between Prime Minister Modi and President Putin. But if you look at the overall defense basket, there have been some mega deals that have been announced recently. In fact, a lot of these companies have been winning orders. On the back of swelling order book, would you still advise looking at defense stocks after the kind of correction they've seen? Would you say that now, given the earnings visibility and order backlog that the companies have, the risk reward is looking fairly okay after the recent correction?
Right. So I think, Russia has been a big player. Almost two-thirds of the military equipments come from there. Russia continues to supply and service a majority of India's frontline platforms like fighter jets, submarines, tanks, etc. So I think the talks will definitely continue on maintenance supports and future acquisitions during this visit. Remember, this is the first visit after the Ukraine war has started. So I think there is a lot of positive which we can take out. Having said that, I think there is always a large cycle which is playing out in defense stocks. Getting an order is one thing, but executing it over multiple years is one thing. So even though the stocks have corrected, the valuations are a little better than what it was, let's say in 2023. I believe given the slowdown which is expected in H2, one can take a little bit easy and build positions over periods of time. There are certain stocks like BEL and even in the private space which are in the data electronics parts, providing data electronics parts. Where I think the opportunity is there. It's just that the cycle is still slow. The capex investments which the government will be doing will be on the slower side for at least next couple of quarters. But there is definitely a medium to long term opportunity. It's just that you don't have to go all in buying into these stocks. Maybe pace it over the next 6 months to initiate a position again.
Okay, so take a more staggered approach when it comes to the defense space. Right. Okay, let's talk about some of the stocks that are in focus. JSW Steel, that stock came under a fair bit of pressure yesterday. Of course, it has inked a JV with JFE, Japanese conglomerate, and will be selling a stake in BPCL. It is being viewed as a long-term strategic move. I think the street wasn't really happy with the enterprise value at that point of time, but post the management clarification that the debt will come down quite significantly, and of course the pricing not being that low that the street was really anticipating, or the street had thought actually initially. How do you think this will work out for JSW Steel per se? Would you see that this deal as accretive for the company going forward? What is your thought?
So I think the investment which JFE is making, that is basically to jointly own and operate the steel business of Bhushan Power and Steel. That's a 50-50 joint venture with the JFE acquiring 50% in the joint venture. The deal is a little complex in the sense that there is a series of steps which they need to take. The joint venture will probably happen by March only, and we'll see the effects only in the next financial years. It helps, in meeting the targets. The JSW Steel has a capacity target of 51 million ton by FY31. JFE at the same time has a target of 10 million ton by calendar year 2030. So it will help in that manner. The deal is also structured in a way that the promoter entities will not get any cash equities. The promoter parties will actually exit within JSW Steel shares. So I think there was a little bit of confusion according to me in that analysis, how the deal was structured. So that's why you probably saw that slump yesterday. But if you actually go through it, it's a no doubt a little bit of complex deals. But I think overall it will help in the earnings of both the companies, especially JSW Steel. And when the tranche from JFE comes, then you'll also see a de-leveraging happening and the debt reduction of about 4,900 crores, in the JV. So I think from a medium term point of view, it's a good deal. The short term, market may take a little bit of time to adjust, and also there are 4-5 months to go before the joint venture gets finalized.
Okay, that's the view on JSW Steel then. But let's talk about autos as well. The November sales data was fairly encouraging. The CV side also, perked up in terms of sales figures for PV makers as well. For Maruti in particular, the entry level car segment that was struggling, saw an uptick as well. But given the kind of up move or rally that these stocks have seen since the 14th of August, since the first announcement came through from PM Modi, these stocks have seen quite a lot of run up. So would you say that the best of the move is now in the price? Also, given the fact that despite all the good news, FIIs I think have been sellers in the auto universe in the month of November. So how do you see the trajectory panning out from here?
Yeah, right. So I think the markets are always forward looking. So a lot of these auto stocks were actually rallying much before the GST cuts actually were announced. So we've seen some sort of profit booking happening, but I don't think GST cut is sort of one time event. It eventually will percolate over the next few years also. And India has a lot of festive seasons. The South India will have a festive season next month with Pongal and Makar Sankranti around. So I think right now there was a slump of auto sales when the GST cuts were supposed to happen from 14th August till about 22nd of September. Then there was a huge rise in sales of automobiles in the festive season of Dussehra, Durga Puja, and Diwali. I think we'll probably hit a little bit of a low in terms of sales for about a month, and then we'll pick it up again, in the festive season. So I think the trend of people buying automobiles will stay. Obviously, the automobile. The borrowing cost will also come down. Hopefully, the RBI will cut more, so that can also be passed on. So I think the trend is there, but I'm a little cautious on the exporter side of automobiles, where there are tariffs issues and those kind of things are panning out. The trade barriers are still quite high. But the companies which have predominantly domestic operations or a majorly non-US exposure, I think those companies should do fine over the next couple of years.
Okay, that's the view on the auto universe. But from autos, let's skip to banks as well, because thus far PSU banks have outperformed private names. But then there has been a clarification. They have been running up on the hopes of further reforms, right? But the government, of course, clarified in the Lok Sabha that the plan to hike FII limits isn't really happening. So, because of that, of course, we saw a fair bit of correction in PSU banking stocks yesterday. But does this clarification change the thesis now for PSU banks? Do private banks get an edge? How are you looking at this entire thing?
So I don't think there is too much to look into this FI kind of statement, because even with the current limits, these limits are not fully utilized for a lot of PSU banks, especially the 5-6 lower PSU banks. The limit is not utilized. In fact, the government holds anywhere between 90 to 97, 98% in these banks. So that is not really a dampener. I think the valuations were really cheap, or I would say very fairly valued. A lot of these banks about 2-3 months ago were available at closer to book value. So there was an angle of under ownership again happening. So that has played out. A lot of these stocks have moved up 40-50%. Even the index has moved up 25%. Having said that, I think the top two private players are undergoing a technical adjustment. Their weightages are going down in Bank Nifty, so there is a little bit of selling pressure happening, a little bit of front running happening. So these are almost 10% cut, which is happening on their Bank Nifty weightages for ICICI Bank and HDFC Bank. And this would happen over 5 months, but every month the weightage comes down by 2%. So it's a staggered approach of decreasing the weightage, but I think that's playing on the market participants' mind. And that's why we are seeing that these two stocks are not participating so much. So it's an adjustment period. At the same time, we are seeing the new entrants like AU small finance banks actually gaining in momentum. Having said that, I think I would stick with top 2-3 PSU banks only and top 2-3 private banks only. The credit growth will be much more better in these stocks. The capex cycle will hopefully come back next financial year. The NIMs would bottom out at that point of time. RBI cuts would also be out of the way. So I think from a next year point of view, I'm bullish on both PSUs and private banks, but I'll stick with the top 2-3 names only.
Okay, stick with the top 2-3 names when it comes to both private and PSU banks. But let's talk about the recent spate of issues that have really hit the market. Anything that's caught your attention? Grow, of course, is profitable. We keep getting queries as to whether or not one should invest in Grow at the current juncture or not. And secondly, we had numbers coming in from Pine Labs. Optically, they look good, not deep into profitability, but nevertheless, they have reported a profit. And of course, yesterday we had Meesho opening, a strong retail interest. Experts are saying the business is good, and the fact that it's being touted as being more reasonable versus the recent spate of IPOs. So within these, new companies that are coming to the Lal Street, anything that caught your attention? And what about Meesho? Is it a subscribe?
So I think Meesho is a good company in a good sector. It is one of the largest e-commerce transactions player. So as far as the business model is concerned, it has undergone a little bit of turbulence in last year, where they had to acquire a few things, acquire a few companies. So I'm not too worried about the business as such, but the valuations are quite expensive at 55,000 crores. As a value investor, I would not be very keen on paying that kind of valuations to a business where the competition level is quite high. Maybe going forward, if we think that the number of players in this space are getting reduced, Meesho is able to maintain the margins, etc., then we can have a look at again. Similarly, Pine Labs, it's a good business. It was one of the early players to get into the payments space. But now the competition is too high. Even in that space, you have multiple players within that payment space. Recently, Paytm has also got an aggregator license. So I think the competition is too high, and we have to see how these things unfold over a period of time. So at this point of time, I'm a watcher. These stocks are on my watch list, but I don't really recommend a position into that. Mainly because I don't know how the competition dynamics will unfold. But definitely I will keep a watch on these, and if the valuations gets much more comfortable, if there is much more clarity on the business operations, then we can have a look at them.
Okay, that's the view then. But before I let you go, Amit, top 3 themes going into 2026, if one is rejigging portfolio.
Right. So I think one of the themes is NBFCs. I believe that banks would also do well, but NBFCs would probably create a greater alpha because that's how the cycle plays out. The borrowing cost goes down, so NBFCs benefited much more than the banks. So we can generate a little bit larger alpha in NBFCs. So that is one theme where we are placing our bets. Second theme is the sector may be a little overvalued in hospitality, but I think there are certain companies which are available at reasonable valuations, and one can look at that. That is part of our discretionary consumption basket, where we are looking at certain hotels which can be beneficiary of this upcycle. Obviously, you need to be selective because of the valuations, but there are opportunities into that. And thirdly, we are also looking at started looking again at the infra and the construction themes. A lot of these companies are now available at closer to book value. There was obviously a lull because the government was not spending in the last 15 to 18 months because of elections, etc. But I think now the capex cycle would also come back. They announced in the budget, they announced 11,000 crore capex, but a lot of that has not been given in the form of orders, which would happen, in the next 3.5 months. So I think infra construction is there, and again you have a budget where the expectations would get a reset of the capex, how much capex are they are doing in the infrastructure. So I think the valuations are in favor in that. A lot of the stocks haven't done anything much over the past 18 to 24 months. So these three themes, NBFCs, discretionary consumption, especially hospitality, and infra and construction, we are looking at for 2026.
All right, those are the top three themes to keep on your radar as we head into 2026. With that, Amit, would like to thank you for taking out time and joining in. Look forward to more interactions. Good to chat with you, and we'll have you back on the show pretty soon. Thanks a lot.
Thank you, Nandita, for having me.
Thank you. Well, with that, let's take a look at the market. Good part is that we have reclaimed that 26,000 mark at the high point of the day now, 26,030. That's where we are perched at. Sensex now up in triple digits, 160 points up on the Sensex. Mid-cap index, up 0.2%. So you can say that the benchmarks played catch up with the mid-cap index. The Nifty Bank index also trying to stick to the positive zone. It's moving between red and green as of now. It's a tug of war really, to say, so to say, on the bank Nifty. But the good part is that the advance decline ratio is also in favor of gainers at the current juncture, marginally so, but nevertheless breadth is positive. In terms of sectors, as I had mentioned earlier, it was the metal pack that was taking the lead on the back of weakness in dollar, but now the IT index has raised past metals. In fact, the IT index is up in excess of 1%, 1.5% uptick on the IT index. Autos are also back in the green. Metals, steady, 0.5% gain, and even FMCG pack has reversed course and has come back into the positive territory. FMCG has been under pressure of late. Today, seeing some buying interest. Banks marginally in the green as we spoke, and Nifty PSU Bank index as well, holding on to that positive zone, by the skin of its teeth. Pharma, real estate and media, these are the three pockets that are out of favor at the current juncture. Since we are talking about some of these IT names that have staged a very good uptick, let's see which are the top gainers from the IT pack on the index. Tech Mahindra up 2%, TCS up 2%, Wipro, HCL Tech. So top four gainers on the Nifty are from the IT pack. Asian Paints, that has been on an upward trajectory, another 1% gain there on Asian Paints. Hindalco from the metal pack doing well. Some of the two-wheeler makers like Eicher and Bajaj, they are also in favor. I think the rupee depreciation works well for Bajaj because of a fair amount of export that it does. So Bajaj Auto also a gainer on that front. Reliance Industries also trading with positive bias. In fact, it's up over 0.5% or so, 15.50 around that level. BEL, Bharat Electronics, that's up and about. Remember, Russian President Putin will be in India today, and of course, ahead of that, defense stocks will be in focus because the chances of mega defense deals being signed between India and Russia. So yes, we are back in the positive zone. So on that good note, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in, but stay tuned to Money Control for all your other news and updates. And of course, I'll be back with Closing Bell at 3 p.m. to take stock of the last half an hour of trade, and we'll of course get you a setup setup check as well for tomorrow, being an important day, given the fact that RBI policy decision is awaited at 10 a.m. tomorrow. Thank you for watching. Have a great day, and we'll see you soon.